So we will talk about four important data today. As a finance major, these are very important data source you need to understand. And let's do this. Let's first recap what we talked about, previous sessions, and we will go over today's session. So previously we talked about the balance sheet analytics. So how to analyze balance sheet data. And we talk about income statement analytics. We talk about how to understand the income statement. So for income statement analytics, we identify earnings quality and earnings, and the primary earnings and transitory earnings. We talk about what kind of earnings quality is high, what's low earnings quality. That's about income statement analytics. And we also talk about the persistence of sales contract. Sometimes some contract can persist in the future. Some sales contract is done one-time deal. So we talk about this kind of analytics of income statement to analyze the firm's future performance. We also talk a lot about the balance sheet analytics. So we identify what's the good growth, what's the bad growth, and how bad growth predict future negative returns, how good growth predict future positive returns, and why is that? How we test that? We have a methodology to test that. So, so to summarize, for every type of analytics, regardless is income statement analytics or balance sheet analytics, we talk about three things. The first thing is what's the structure and the nature of the data. When I was a computer science major, my first computer science class is data structure. So it's not about programming. It's not about the operational system. It's not about the first class for computer science major is data structure. So basically, you have to understand the structure of the data in order to understand the programming and the logic. Same here. I feel for business and accounting students, I think the first class for you guys should be data structure of the balance sheet, data structure of the income statement. Today, we are going to talk about data structure of analyst, data structure of patent, data structure of loan data, data structure of compensation. We talk about data structure of all four types of important data for finance accounting students. That's number one objective we're going to cover for each data set. The number two objective is what kind of questions you can answer using the data. So for analyst data for offshore, you can use analyst data to predict future stock price. For patent data, you can use that to measure firm innovation, creativity, and eventually predict the firm stock price. For loan data, what you can do is you can analyze the loan contract data, and you can provide advice to lenders, to banks. You can also help borrowers, tell them whether they should borrow money, what money they should borrow to, is the contract efficient. And for compensation data is you can analyze the compensation data to monitor and control CEOs. We have agency problem, right? Why CEO should work harder for you? There's an agency problem there. So how to use the compensation to motivate and control CEOs? That's important. When you do the data analytics on the compensation, you should advise the board of directors, tell them what's the best compensation contract design should be, and how to motivate and control CEOs. So the second objective of understanding this data is what kind of question you can answer using the data. When we say data analytics for what? You have to help someone, help investors, help managers, help board directors. And the third thing is technology, like what research design we should use. We talk about how to calculate abnormal returns. We talk about how to rule out the risk. We talk about so many things, the research design in the class. This is something you should understand for when I talk about this different data source. So to summarize, we talk about balance sheet analytics. We talk about income statement analytics. That's the past you guys can go over. And today we are going to talk about another four type of analytics, data analytics, important for finance accounting major. And for the four types of data, we will focus on the three objectives. First one, data structure of each type of data. What's the data structure? And what's the nature of the data? What information the data contains? That's the first objective. Data structure, content of the data. The second one is how to use the data to help capital market participants, how to use the data to predict returns, to help investors, to help managers. That's the how to combine the data with real business questions. That's the second objective. The third objective is the design. How to do the design, how to do the design, empirical design, how to use the data and the design to answer those business questions. That's the three objectives for each data. So for each data here, for analyst, for pattern, for loan, for CEO, for each data set, I will talk about the three things about the data. So that's today's agenda. And yeah, so like I said, pattern data, you can measure firm innovation. Loan data, you can help lenders and help borrowers. For compensation data, you can motivate CEOs. You don't want lazy CEO, right? You don't want that. You don't want agency problems. So how do you design a contract to help managers to work harder? That's the way. That's how you should do data analytics. So let's look at the first one. You guys can hear me, see the screen. Everything's okay? Just make sure. Okay, excellent. So about analyst data. So what kind of information we know about analyst? So first of all, we have analyst report. I will talk about momentarily, and we have analyst data. So what's analyst job? Analysts do three things. Major work. First, they predict future earnings. Second, they predict future price. Third, they give the buy and sell recommendations. So basically for each analyst, the three main jobs for them is predict company's future earnings, predict company future price, and based on earnings and price, they tell you should buy or sell now. So this is the major analyst major job when you see the analyst report. That's the three things analysts do. So what kind of information we know about analysts? So we know their forecast. We know the consensus. So what is consensus about? So let's say Google. There are at least 40 analysts. They follow Google, give the forecast of the Google future performance. When you get the average of the 40 analysts, that's called consensus. So basically, outside of the 40 analysts, who you should trust, you don't know. You can trust. So we have about 25 students in the class. Each of you give me an idea who I should trust. I don't know. So what should I do? I get average or median of the 25 students idea. So I get that. That's consensus. That's what we know about analysts. So and also accuracy. So what's accuracy? Accuracy is how accurate the analyst forecast comparing to the true value. When they forecast the earnings, you use the actual earnings minus analyst forecast earnings. The difference is the accuracy. The shorter the distance, the higher the accuracy. So this is the accuracy. The horizon is the how long they forecast. Do they forecast 1 month later? Do they forecast 2 months later? Do they forecast 3 months later? And the consistency is about the is there consistency in their forecasting? And there's other variables. For example, number of revisions. So for example, if I forecast Google, do I always revise my forecast in a frequent way? Like today, I believe this is $5. Tomorrow, I think it's $10. How frequent I revise my forecast? That's the number of revision. And also, do they just sometimes they forecast the sales, sometimes they forecast cash flow, sometimes the how experienced they are. Like me, I'm in the industry for 20 years. Like the 20 years is the experience. And which industry I'm in? I'm in the investment. I'm in the accounting industry. And which firm the analyst is following? Does the analyst follow Google or follow Apple, follow Tesla? Like what kind of company the analyst following? So these are all the information you can gather about analysts. And what else? What else is you have the firm coverage, which firm the analyst cover and which industry analysts cover, and also we have a broker, right? Analysts work for Goldman Sachs and Morgan Stanley. So So we have a speaker coming. He works for independent broker. So you guys can see these are all information. These are all information about analysts. So that's the data structure, right? That's the data structure. We know their forecast. We know the consensus. We know the accuracy. We know how long they forecast. We know how frequently they revise. We know a lot of experience. We know this. So what's the idea here? Why we should use these? Why we should use this information? We can use this information to know, should we actually trust some analyst forecast or not, right? We have 40 analysts forecast the Google price. If you know who you can trust, then you definitely you can know better about the future performance of the Google, right? Future performance of Google. So so this is the structure of the data, and you can use the data to do a lot of things. You can use the data to understand the firm. You can use the data to understand the analyst. You can use the data to predict the future firm performance. You can use the data to figure out which analyst you can trust out of 40 analysts. You can do this for a lot of things, to understand the firms, to understand the firm future performance, to understand analysts. So this is something you guys can think about, how you should use the data when you get a job at the mutual fund. Let's say you now graduated. Let's say you finish my class. Everybody get A. I don't know if that's true, but let's say everybody get A, and you get a job and a hedge fund company, and your boss tell you, okay, this is the information you have. Can you recommend some stocks for me? Probably that would be your primary job. Your boss will tell you, you should come up with some recommendation for some stocks. And that's the information. The data you are looking at here is the data you should analyze, and you come up with which firm you should invest. You have to report that to your boss by analyzing this information. So this is data. Let's look at the analyst report. This is an analyst report. What you see here is Zacks. You guys maybe not know Zacks. Zacks is a broker firm, very, very big brokerage firm in the United States. It's a huge broker firm. So they follow Facebook. So so they predict the target price is 383. Though the current price is 332. So definitely it's a buy, right? This is a buy decision, right? And you can see this is to buy. So basically, Jack say this is outperform, this is a buy. So this is a summary of the Jack analyst provide information about Facebook. So they said in the short term, 1 to 3 months, they think is to buy. So it's a buy, and they have some parameters here. And in the 6 to 12 months, they think it also will perform well. So the question to you is, can you trust them? If you can trust them, then you should buy, right? If you trust them, then you should buy. So you have to analyze. So you cannot just analyze the information here. You have to look at the details of the report. But I think we are okay here, right? You know the price right now is $332, and they forecast 383. This is their forecast. They forecast that in 1 to 3 months you should buy it. And there's some other styles, and in the long term they should buy it too. But long term, you see, they also have previous recommendation. Previous is neutral. Okay, so the problem here is, can you trust them? So so you have to read that report. So they kind of give you a summary of their logic. They say, oh, this is the company is doing what. They explain their logic. So they have the reasons to justify why the price is 383. Why the recommendation is buy. They have to justify that. Then you have to look into that to analyze, can you trust them or you cannot trust them? So this is the let's look at what they say. Okay, so they say the reasons to buy. So they talk about Instagram, they talk about Facebook, they talk about the mergers, messengers, WhatsApp. You guys use WhatsApp? WhatsApp is it's like a WeChat in the United States, but WeChat I think it's better. Yeah, it has some more functionality. So they give you the reasons. They give you the reasons for justify why the buy decision. So this here you have to do the data analytics. You have to analyze the textual data. We talked about textual data last session, but the textual data is not a major focus for this class. So you can analyze all the textual data to just figure out whether the buy recommendation they give out is reasonable or not reasonable. But you can look at the summary here is they think the Facebook benefited from the increasing mobile and revenue. It's not from PC, it's from mobile. So you can do some textual analysis on these to figure out whether you can trust their buy recommendation or not. They also talk about the risk. They look at risk. They say that maintains a cautious stance on the revenue growth. So they said the revenue growth might not be sustainable in the future, but sometimes it sounds like a cheap talk, right? No one's revenue can be sustainable in the future, right? This is true for everyone. So does that make sense? What I'm saying is the opinion here is too general. I don't think any firm's revenue growth can be sustainable in the future. So, and they talk about the focus on the stores, lower revenue. They talk about the competitions. They talk about the personal data. And then they talk about the legal issues. They talk about the growth opportunities in the emerging countries like South Asian, Africa, Asian. So these are the risks they want you guys to be aware. So this is also another important resource you can do textual analysis to analyze. Can you trust them or not trust them? They talk about the benefit. They talk about the risk. And do they make sense? Like I said here, maybe I say doesn't make sense because this is too general. But maybe the what they're talking about, the emerging market, that may make sense to me too. So you can do the large data analytics on this textual data to figure out whether you can trust these guys or not. And let's look at what else they do. They compare with their competitors. So who are the Facebook competitors? They listed here: Amazon. Amazon and Electronic Arts, Microsoft, Netflix, Baidu, Baidu, right? So you have so Twitter. So these are the competitors of Facebook. So what they do, they analyze the Facebook's performance relative to their competitors. They're trying to figure out the pattern. Can you actually buy the Facebook or not buy Facebook? So this is the typical analysis normally analysts do. Not just analyze Facebook on its own. You have to compare the Facebook performance with peers. And after you compare with peers, you can better understand the Facebook's current condition and the future growth. So you can see that they compare with Amazon, compare with the Microsoft, Netflix, and you can see that this is a comparison. And you can see they also compare with the industry, right? The industry, they compare with S&P 500, they compare with Baidu, Microsoft, Twitter, and they compare different parameters: market capitalization, number of added. You see how many analysts follow Facebook? 16. How many analysts follow Baidu? 3. How many follow Microsoft? 12. So they can compare about dividend. They can compare about the cash to price. So they do all this comparison just to better understand where does Facebook stand in the industry. Compare with the S&P 500, Baidu, and this. So this is about analyst. And let's look at another example. This is from the Jefferson research. Is another. By the way, it's a great place to work. The JAX and the Jefferson, the Jefferson research. These are all great places to work for finance major students. And yeah, one day when you guys in the interview, you can say, "Wow, I read your guys' report." You can say something, your understanding of the firm. Okay, so so they also do the Facebook. Okay, but you see the format is quite different, right? So let's look at how the Jefferson report analyzed Facebook. So so you can see that this Facebook. So what they do is they put a hold, but it's different period. This is the first quarter. That one it's a second quarter. So first quarter is hold. This is different time. Okay, this is different time. The report here is first quarter of 2025. They said hold. So the Nasdaq, the ticker is FB. So the important stuff is here. What's this pie about? This pie is the Jefferson research, their justification for why should be a hold here. So you guys can see the screen. Let me make my screen larger. So you can see that they talk about what? They talk about the balance sheet. They say balance sheet is strong. They talk about the earnings quality. Earnings quality is strong. They talk about the cash flow quality. Cash flow quality is strong. They talk about the operational efficiency weak. This is weak. Valuation is weak. So this is their analysis. Does that sound very familiar with what we talked? Did we talk about the balance sheet analytics? Did we talk about that? Did we talk about earnings, income statement quality? Did we talk about that? So this is the Jefferson research. Their style is very similar to what we discussed in the class, right? We talk about the balance sheet analytics, and you can analyze the firm's balance sheet is strong or weak. We talk about income statement. By analyzing the income statement, you can see whether the earnings is strong or not. And you can analyze cash. You can see whether the cash is strong. So basically, what do we talk about in the class? It's very similar to Jefferson Jefferson research. What's their way to analyze the firm? Okay, so you can see that you can see the buy and hold decision along the way. They said hold, buy, hold. So basically similar to the Zacks. Zacks is the previous brokerage. Similar to Zacks. Zacks recommend buy in the second quarter of 2021, but here Zacks recommend hold for 2021. So same question is, can you trust Jefferson? Can you trust them? In order to trust them, you have to see their detailed analysis of how they come up with this, right? How they come up with this. So basically, so the Jefferson research give a hold recommendation for the first quarter. They give the overview is balance sheet, income statement, the cash flow, and they give the time series recommendation is hold, buy, hold, buy, hold. So we will look at the details of why they think a balance sheet is strong, why they think earnings is strong, why they think the cash flow is strong. You have to look at their analysis and to see if you can trust them. So look at how they do the earnings. So you can see that the way they do earnings is they look at the net income versus adjusted net income. This is very similar to what we discussed in the class. Do you guys remember? I told you guys, do not just focus on the bottom line numbers. You have to focus on the firm's primary income. Do you guys remember in the class we talk about firms may have income from their primary business. Firm may also have income from their side business. We want more income from their primary business rather than from side business. So you can see that this is they have very similar approach to us to analyze where's the income from. Is the income from the primary business or the income from the side business? So, and also earnings versus operating cash flow. So how much is earnings, how much is cash flow? And accruals. I didn't talk about accruals in the class, but you guys can look into it, But we do talk about what? We do talk about the persistence of sales contract, right? You guys remember? We calculate for certain sales growth, for certain sales contract, how sustainable the sales contract can be in the future. We talk about that. So you can see that our approach, our data analytics in the class, it's very similar to what Jefferson research is doing. They analyze earnings quality. We analyze income statement. They analyze balance sheet. We analyze balance sheet as well. And they analyze net income versus adjusted net income. We analyze primary income versus side income from side business. And we also talk about the persistence of sales contract. They talk about accruals. So you can see that there's a lot of overlapping between what we discuss in the class and what the industry is doing right now. And particularly for Jefferson research, this is something you guys can look into. So basically, you guys need to analyze the information here to figure out, can you trust the Jefferson research? Can you trust the Jefferson research and its quality is strong? So basically, the idea here is, can you actually trust? Can you actually trust when Jeff's research says earnings quality is strongest? Can you trust them? So how should you trust them? You have to analyze their patterns. You have analyzed their analysis to see whether you can trust them. Some of them are very consistent with what we talk about in the class, right? So this is about earnings quality. You also can see they said the balance sheet is strong. So what they look at the receivable days out. They look at the current ratio. They look at the quick ratio. So basically what they look at is the liquidity of the assets. So basically how long they can get cash back, And they look at this kind of liquidity of assets to identify balance sheet. And we talk about different ways, right? We can look at the asset growth. We can look at the asset growth to identify if it's a strong balance sheet or weak balance sheet. So we talk about different approach, but the idea is the same, right? So both the Jefferson research and our class both want to identify strong balance sheet or weak balance sheet. But for Jefferson research, they talk about the liquidity of assets to identify strong versus weak. We talk about the positive asset growth versus negative asset growth to identify strong or weak. So this is we have the same purpose, same objective, but we have a little bit different methodology to do that. So same thing, why you should trust the Jefferson research. You have to analyze their analysis to see if you can trust them, So how they also justify why the cash flow is strong. So what they do, they calculate operating cash flow, they calculate free cash flow, they talk about the flow ratio. So they use different ways to justify why they think cash flow is strong. So you have to analyze, you have to read this, and you have to do textual, you have to do numerical analysis to see it's something you can trust. That's something you can trust. And then they also do compare with the peer firms. You see, so they compare the peer firm. What's their peer? So they have a different definition to peer. So you see the peer they define is the Tencent. Tencent is the the WeChat, the parent company, Yahoo, Facebook. So they have the Bengals. They have the Yahoo Japan. So you see that when they define the peer, the Jefferson research define the peer is a little different from what the Zacks define the peer, right? Zacks we see this Amazon, Netflix. Here what we see is Tencent, Yahoo. Yeah, so different people have different ways to define their peers. But what's the same is you want to compare Facebook with industry peers to figure out where does Facebook stand. Does Facebook stand in the top of the industry or the bottom of the industry? But by comparing Facebook with industry peers, you can figure out the Facebook's future performance. You can tell investors whether you can buy or sell or hold this Facebook company. So this part is the same, right? This is part is the same. So basically, what do we see here? What we see here is you do the Facebook, you compare Facebook with peers. Once you compare Facebook with peers, you kind of understand where does Facebook stand in the industry. So you better understand Facebook. So that's about analyst report. So just to summarize a little bit about analyst report. So what data you have? The data you have is you have all analyst data. about analyst forecast, experience. You have all about analyst level data. So all variables here is analyst level. For each analyst, you have the data. Okay, this is analyst level data. And what do you have here? What do you have here? It's a report level. So each report, for each report, you can get a buy and sell. For each report, you can analyze why they justify it's a buy, why they justify it's a risk, and they compare with the industry peers. So, so this is for each report, you can get this data. And also you can have different companies, different analysts have different report. Different companies have different reports. So for Facebook, we see two reports. One is from Zacks. Another report is from the Jefferson Research. And the Jefferson Research, you can see that they also give recommendation. They justify their recommendation by analyze income statement, the balance sheet, and the cash flow, and compare with peers as well. So by understanding this data, by understanding analyst level data, by understanding the report level data, eventually you want to better understand the Facebook. That's the purpose. Okay, that's the purpose. So basically, analyst is kind of analysts are just people to help you to process the information, and so analysts, they help to analyze the Facebook information, to gather information. So what you should do is you should read analyst information, you should read analyst report information, you should read the Facebook information, and eventually you come up with your own opinion who you should trust. You should come up with your own opinion on should you buy Facebook or should you sell Facebook. That's typical buy side. If you guys work on the buy side, that's what you do. Your hedge fund managers tell you, hi, maybe let me see, hey Connie, there's 100 stocks here. Can you just give me some recommendations which one I should buy? So what you do is you analyze the data about these 100 companies, balance sheet, income statement, and also you analyze the analyst report for these 100 firms as well. And then you tell the hedge fund managers, here is the two stocks. I think there's way to go. That's what we should do. That's what we should do. So this is about analyst report data. So basically, to summarize, three things. What's the data structure, right? We talk about data structure. This is the data structure, report structure, and then the analyst experience, the data structure. We talk about data structure. We talk about what kind of question we can answer. Right, we use this report to better understanding Facebook for investment decision. That's what we do to use the data. And what's the research design? The design we don't talk about much here, but this is very similar to what we talk about in the earlier class. In the earlier class, we talk about how to calculate abnormal returns. We talk about how to rule out the risk. We talk about the textual analysis. So basically, for every data set, these are the three objectives: structure, and what the data should use for, and methodology. So I want to pose for questions.